I'm Pamela Stahlke. I'm with the Risk Management Agency. Probably some of you don't know what the Risk Management Agency is, so we are going to talk about that here shortly. But I also want to point out we have Chandra Mason with us, who is actually from our headquarters office in Kansas City. So we're going to talk about basic provisions and policies, and she is the branch chief, so she's the keeper of all those things. So stump the chump today. Ask us any questions that you have, and we're happy to answer them or find folks smarter than us to help us through that. We're going to talk through a couple things here. I always like to start out with a little bit about who we are, because I think as we're out and about, a lot of you maybe don't deal a lot with Risk Management Agency. And then we're going to talk about what you're here for, cover crops. And then we're going to end with a little bit about something we have going on in Iowa that's a little bit different that can touch cover crops, and wrap up today. So Risk Management Agency, who the heck are we? We are the St. Paul Regional Office. We serve Iowa, Minnesota, and Wisconsin. Pretty excited about that. This is my home area, so I love getting to come out and visit with all of you. What do? We write crop insurance policy and procedure. So how many of you here have a crop insurance policy out of curiosity? All right, quite a few of you. So if you have a crop insurance policy, you probably deal with your crop insurance agent or your adjuster. You probably don't see the Risk Management Agency. I like to say that we're small, but we're mighty. And I've already told you that our office encompasses our 3-state area. We are so small because I don't need to tell you we do a lot of farming up here. So there's a lot of business that's done. What do? We do this. We communicate with you all. We are also your voice for any changes and what you need done for crop insurance, so that the crop insurance is working for you in our region. You know, we do things differently up here in the north than they do in the south and the east and the west. And so our job is to make sure in our office that the crop insurance is working for you up here in the northern Midwest. I like to start here because maybe it's the former ag teacher in me. I like you to know, and I think it's important as we talk through what we're going to today, for you to understand how your crop insurance policy works. So I'm going to take just a brief moment here. Crop insurance is one of the very few public-private partnerships, and I apologize in advance because I know some of you have already heard me speak on the Iowa Learning Farms webinar, so you've heard this already. At the very top here, we have the USDA Risk Management Agency. There's only 450 of us. I'm a former farm service agency person. That's how I came to USDA. I started as an ag teacher and then came over here. If you go to your local NRCS office and farm service agency, you've got great people at the counter and at those offices that are helping you. That's not how we work at RMA. As I showed you, we have regional offices. We have 12 people when we're fully staffed at our regional offices. Fun fact, I'm going to be hiring 2 people that'll be coming out in the next week or so if you want to come work with us. Congress writes our policy and procedures, and you work with your crop insurance agent when you want to sign up. There's a standard reinsurance agreement, so there's a contract that is made between the public and the government for folks that want to sell crop insurance. I always liken this to, most of us have some type of other insurance. You have homeowners insurance, you have car insurance, you have something like that, and you have a lot of different choices, right? You got State Farm, you have Geico, all different mutuals. There's only 14 companies that you can buy your crop insurance from, and that's because it's a pretty rigorous standard in order for them to sell crop insurance to you. So that's those AIPs, approved insurance providers. Down at the bottom, we have your crop insurance policy that you've bought right in the middle. And when you bought that crop insurance policy, you bought that from an agent. There's approximately 13,000 of them that you can choose from. And then we have lots of loss adjusters. The other stump I'll give you is if you're looking for a part-time or a great full-time gig, our loss adjusters, we need them. They work directly for the companies, and they're the folks that if you have something that happens on your farm, they're going to come out and take a look at what's going on and assess the damage. And then we have all of you. We have approximately 1.5 million crop insurance policies in the country right now. Briefly, our crop insurance cycle, how does it work? Well, over there on the right, we have our application process. So at the sales closing time, you're buying your crop insurance policy and your insurance is attaching at that time, or you're making a plan for insurance. Come summer up here, you're certifying your acres. You're probably doing that 2 times. You're probably going to your farm service agency and you're going to your crop insurance agent. You're doing that by July 15th. If anything's happening in there, we've got our blue circle where it's indemnity and claim time. That's where, of course, your adjusters are coming into play. We've got that notice of damage. You're communicating with your agent, telling them, hey, I've got an issue out here. And what I like to focus on that you probably haven't heard about is the red area that's the contract change date. This is where that public-private thing comes in again. This is our guarantee to you, meaning the government to the public and the companies, that if we're going to make a change, we're going to give you time to think about it. We're going to give you time to give us input and let us know, hey, that works or that doesn't work for me. We're also trying to give you time to have those conversations on your farm, with your family, with your agent, to ask questions on those changes. So any changes that are going to be made, we're going to make those by the contract change date. And that's going to be months in advance of the time that you have to buy that policy by. So you can ask all kinds of questions and get educated on it. And then I just like to throw this in there because I know that everybody knows that crop insurance is subsidized. It's not because our farmers need a handout. It's because you're feeding the world and it's really expensive. I have 2 teen drivers right now. Hallelujah, my daughter bought her own policy, so now I'm down to 2. And a little guy was turning 15, so I'm going to put 1 more on. We know how much we all pay for insurance, right? We want to make sure it's affordable for you. So I like to throw this up there just to give you an idea of what the average premium subsidy is. So on average, it's 62%. So just a general example, because I changed my major over business calculus, $20 premium an acre, are your farmers paying $7.20, and the USDA is paying $12.40. And this is a 70% coverage level. And again, this can all change depending upon where you're farming at, since you know your rate is based upon the history of your region and of course your farm. But I just like to throw that up there just to give you an idea. That's summing up my summary of crop insurance. I won't stop for questions, but if you got anything, hold them and we can talk about them at the end. And then I like to, at the very end here, just give you an idea of what crop insurance is in Iowa. So what can you insure with federally subsidized crop insurance in Iowa? This is what we got. It seems kind of short for the amount of agriculture that goes on here. But I always like to say, if we don't offer it, you have 2 avenues. Come to us and tell us where we're not meeting your need. That's what we're here for at the regional office. Or go over to Farm Service Agency and see if they have a NAP policy, since they will insure most of the crops that we don't have federally subsidized crop insurance for. And then before we get into the cover crops that I know you're here for, I just like to give you this. So this is the top 10 in crop insurance for Iowa. And we used to just do crops, but I come from a beef and dairy background, and that's what our farm is, and so I like to throw the livestock in there. I don't know if anybody's a livestock person here. I don't think you're shocked that corn and soybeans are number 1 and 2, but swine's number 3, and milk is number 4. And then feeder cattle and fed cattle are in that 5 and 6 spot. And popcorn was number 10. I was a little surprised that that one slid in there. Okay, cover crops. I'm super excited to talk about this because this is something that we are reviewing, that if I have a few moments at the end, I'm going to talk to you about that process and how we'd love for you to be a part of it. This is just the very tip of the iceberg, folks. This is honestly doesn't take that long, but hopefully it'll answer some of your questions, and if you have more, we're happy to talk about it with you. I like to start out with the definitions. So what is a cover crop, or how do we define a cover crop? This is important for you to know because all of our terminology will point back to this definition. It's essentially generally recognized by ag experts as being as an agronomically sound practice in the area for erosion control and other purposes related to conservation. So I won't read to you what you use cover crops for. I've been listening to the presentations, I've been watching the show of hands, and I know that you know what they're for. I do want to point out that we do not have an approved list of cover crops over here at Crop Insurance. You're going to hear me mention a lot that we point a lot to NRCS. In the umbrella of USDA, NRCS and Farm Service Agency, we all report to the same undersecretary. So it really, in cover crops, is something we really work together with them. Cover crops, if you are choosing to insure your row crops and have a cover crop, they're going to be reviewed for us at Risk Management Agency under good farming practice determinations. That matters because a good farming practice determination is where your farm is looked at to make sure you as a farmer are being a good steward of that land and following general practices that other farms practice in the area. What does that mean without the government gobbledygook, Pam? That essentially means that you're being a good steward of the land and you're following good cover crop practices in this instance. If you are questioned by your insurance provider, by your crop insurance company, on the grounds that they're questioning your cover crop management in relation to your insured crop, it's going to come through a good farming practice determination. That's why I'm talking about this with you. We're going to talk about what a good farming practice determination is so you can understand what that is. Another note for cover crops, because we're evolving as you are all evolving, when you plant a cover crop starting in 2020, our insurance is going to attach to your insured crop at the time of planting. That used to be different, and I won't get in the weeds there because we're far enough down the road that we don't have any policies that are impacted by that anymore. But just know that if you've got a cover crop on that ground and you plant an insured crop, once you plant that insured crop, there is going to be no delay in attaching insurance to it. It'll be just like our insurance attaches to a crop without a cover crop. A little bit more on this. So we use NRCS termination guidelines for the rules that you should follow for that cover crop practice on your farm. The NRCS termination guidelines were jointly developed with FSA, NRCS, and RMA. Now, I do realize that NRCS are our technical experts, but we work together knowing that each of our agencies were going to be using these. If you follow these guidelines, that's your assurance that if you're following these, you're going to be in compliance for your crop insurance policy, which is why we always point you to them, because we want you to know what you need to follow. It's a question that we get frequently. Another question that we get that we added a bullet for here is that a cover crop is not considered a first crop if terminated in accordance with your NRCS cover crop termination guidelines. This is pretty important because we have a lot of first crop, second crop rules in crop insurance. And if you've got that cover crop out there and you follow these guidelines, it's going to be considered a cover crop and it's not going to be considered a first crop. Pretty important determination. Along this lines, again, I don't want you to look at this as us hammering you with the rules. This is more we just want to be upfront with you and let you know, hey, if you're out there doing cover crops, and it sounds like a lot of you are, this is what you should be looking at. So if you're growing cover crops, here's some things that you should look at if you want to make sure that you're doing the right thing for your crop insurance. We've already talked about follow the NRCS termination guidelines. The second thing is we've got a lot of experts in the room, and you've already had some great presentations today. Follow published materials from ag experts in your region that are telling you what you should do with cover crops in your area, because we do understand there's regional variations. You know, southern and northeast Iowa is way different. I used to live in Missouri. It's way different than southern Iowa. Follow your regional experts. And third, if you're doing something, or let's say that I'm going to call you maybe a pioneer and you're doing something that's a little bit different than your neighbors, but you think it's a good agronomic practice, go ahead and communicate with your agent what's going on and have that communication early, and you can get an exception from your agent and your company for what you're doing out there for your cover crops, for your crop insurance. The most important thing I can tell you, and yes, I do work for USDA and RMA, but I stepped away for a few years and worked for an AIP and a crop insurance company, so I have been on the other side, is that communication with you, the insured, and your agent is just so important. That can really help you in so many different ways. So these exceptions are communication between you and your agent saying, I'm doing something a little bit different out here, but this is why I'm doing it, and this is the recommendation I'm following, and this is why I want to do this for my operation. And we are trying to be as flexible as possible, knowing that we are not always on the forefront of what you're doing with your farms, especially with cover crops. Okay. You're probably familiar with this, but I just wanted to throw it up there, especially because we're in a region that's split. Again, we follow those NRCS guidelines, and so these are the NRCS termination guidelines. So I just like to put up there, I don't need to tell you that in Iowa and Minnesota, which is part of our region as well, that we're split between Zone 3 and Zone 4, which following those guidelines tells you when to terminate that cover crop before you plant your insured crop for us. All right, how do we link all of this together? There's a wealth of information on our website. And if you don't go to anything on our RMA website, I would really love for you to go to rma.usda.gov and go to our actuarial information browser. If you want to know when the last date you can plant a crop and it's insurable is, if you want to know what we use as your county average yields, just to name a few, that's information that's found on there and so much more. But you're also going to find special provisions on there. If we made any exceptions to the rules for insurance in your county, we make them in a special provision statement. So for every crop in every county, we're trying to recognize that you all are doing cover crops out there. So you'll find this special provision statement. And what it's stating, I'm going to try to avoid reading it to you, is that if you're growing a cover crop, you're growing it to meet the rules of what a cover crop is, which we started this presentation with. You've grown it in the last 12 months. You're terminating that cover crop according to NRCS guidelines, or as we've already talked about, you're following good management practices that other ag experts in the region are recommending. And then we've also got a link to our cover crops page on our website if you've got other questions. And the last thing that we've added, because this came up actually when I was out in the field and had stepped away from USDA, corn planted on acreage following a crop that has been prevented from planting is not a cover crop. And maybe you didn't have that in Iowa, but I was working in Wisconsin at the time, and we had a lot of corn planted as a cover crop. So we're just clarifying for you that corn is not considered a cover crop. And I do realize that I did just state something where I told you we're not telling you what cover crops are, but we are telling you that we're not considering corn a cover crop. Just to be clear. All right. I don't want to move away from cover crops as I'm summarizing or getting through cover crops here without telling you what a good farming practice is. Because at the very beginning, if you recall, I told you that if you're planting cover crops, what you are going to be accountable for is to make sure that you're following a good farming practice for those cover crops for your insured crops on that farm. What the heck is a good farming practice? Well, good farming practices are let me take a step back. Good farming practices are what you are following on your farm to be a good steward of the land, in a nutshell. Who determines if you're following a good farming practice? That is up to your approved insurance provider or your crop insurance company. So these are the Rain and Hails, the Farmers Mutual, the ProAg, those are just to name a few of your crop insurance companies, whoever you're insured with. So what is the expectation? The expectation is that you're using production methods that are going to produce an insured crop that are going to allow it to make progress towards maturity that's going to produce the yield in your crop insurance guarantee. That's essentially what we're looking for when we're looking to make sure that you are following a good farming practice. So that means that when you are also using a cover crop, that cover crop is not impeding your crop to get to that crop insurance guarantee. That second bullet is your approved insurance provider may request. FCIC is us. We're governed by a Federal Crop Insurance Board of Directors. So when they say FCIC, that's RMA. We may be contacted to determine if you, the farmer's production methods are a good farming practice. So at the regional office, we do handle good farming practice reviews where we will get requests from AIPs. They'll send them to us and they'll say, we have a good farming practice, we'd like you to review it and tell us if you agree or don't agree that this producer did or did not follow a good farming practice. We're actually reviewing one right now in the office. What's the purpose of it? The purpose is not oversight. The purpose, well, I shouldn't say that. The purpose is oversight, let's just be clear. But the purpose is to make sure that everyone is being treated fairly and equally because this is a government program. But it's also to ensure that the policyholders' production methods aren't affecting your guarantee on the farm. You know, we are required to make sure that the crop insurance program, since it is federally subsidized, we're required to make sure that it is working as it should. So we want to make sure that if you're using cover crops out there, that those cover crops are not affecting the productivity of the farm. Who's responsible for making sure if you're under a good farming practice review, who's going to bring all the documentation forward and make sure that you are following those procedures? It's you, the farmer, or the policyholder. So you're going to bring forward any records that you have that show that you have followed good farming practices. That can be, and if you want examples of that, that can be anything from seed receipts from when you bought the seed to any herbicide receipts from the co-op, anything else you need to prove that you've done what you should to make that land get to peak production. I don't want to get too in the weeds, but I think it's important for you to understand what a good farming practice is. All right, I'm going to keep moving. Overseeding and interseeding. We wanted to talk about this because we actually get a lot of questions about this. You can overseed and interseed a cover crop into an insurable crop. So like I said, we've been getting some questions. So both of these terms are defined as planting one or more cover crop species into an existing or established crop. Some common uses or ways that we see it in our region are a grass or legume into an existing small grain, as well as seeding a cover crop into a corn or a soybean. The key here is it cannot impact yield or harvest. It cannot affect the insurability of the crop, and it's separate. It's a separate planting from that insurable crop. And remember, you're still going to terminate this crop. You're not going to, according to NRCS termination guidelines. So you're not going to bring this overseeded and interseeded crop to harvest. So I'm going to quickly go to the next slide because we also have interplanting that happens. So if the main crop and cover crop are planted in a manner that does not allow separate agronomic maintenance, so you can't terminate it, that's considered interplanted. That is not insurable. And I feel like there's always an exception to this rule, so in a couple moments here I'm going to talk to you about relay cropping that is insurable. We have a lot of resources for cover crops, so please go to our website. We're going to also point you to NRCS. And with that, I'm going to transition here to double cropping, which touches cover cropping for us. So why are you talking to me about double cropping, Pam? Well, we have been told that there's a lot of farmers that would like to or are double cropping soybeans. And so this year we have an initiative where we are educating farmers on how you can double crop soybeans and get insurance for that if that's what you would like to do. What does it mean, first of all? It's producing 2 or more crops for harvest on that same acreage in the same year. I already talked to you about defining what a first crop is, so this is exactly this scenario. You have a first crop, and now you have a second crop that you're bringing to harvest. Most frequently, what's happening in our region is a canning crop. It's a canning crop followed by soybeans. Sometimes it can also be wheat. You guys are special in our region because typically you have to have 3 years of history. So you have to have been double cropping for soybeans for 3 years in order to be able to do this. If you see the little orange area in Iowa here, which we're pretty much standing in, you don't have to have 3 years of history. Why does the rest of our region have to have 3 years of double cropping history in order to get a written agreement? And I should first tell you what a written agreement is. Double cropping is not a practice that you can go to your crop insurance agent and just say, I would like to sign up for a double cropping soybean policy. We don't offer it, but you can come to the regional office and get a written agreement, which means you go to your agent, you say, I'm double cropping soybeans. I would like to get crop insurance for this. They fill out a form to get double cropping insurance. Essentially, it's called a written agreement. It comes through your insurance company to us, and it's like a manual underwriting is essentially what it is, and we're the underwriters for that policy. Because of the agronomics and essentially the climate here, we feel like it's less of a risk for you to be able to double crop and bring that second crop of soybeans to harvest. So we are allowing you to request a written agreement without having done this for 3 years in these orange counties in Iowa. So this is just kind of giving you the details of that. I wanted to tell you, I'm going to tell you about relay cropping, so I'll hold on that for a minute. What do you have to do if you want a written agreement? A few reminders. First and second crop provisions apply if you do not have a history of double cropping. Just some rules about what you need to do. Written agreements don't change any double cropping or prevent plant policy, and producers that don't meet double cropping provisions will have their payment reduced. That's a lot of jargon. Essentially, if you are planting soybeans and you're planting a crop first, talk to your agent, and you're also welcome to call us and ask any questions that you have. You can still, some of you are probably telling me, Pam, the crop insurance deadline has passed March 15th. If you have not had a written agreement for soybeans for double cropping, you can request this written agreement until the acreage reporting date of July 15th, which is why I'm talking to you about it today. But I want to talk to you about relay cropping, because we have had some written agreements for relay cropping down here in Iowa. So relay cropping is not a cover crop, but it is that second planted crop where you're bringing both of the crops to harvest. So we talked about interplanting and overplanting. This is interplanting and overplanting, but you're not terminating that second crop. Both the crops are going to come to harvest. So if this is something that you're doing, you can also request a written agreement for this. Iowa's also split if you're doing this practice. In the blue area, you don't have to have 3 years of records. If you're up in that northwest corner, you have to have 3 years that you've previously been doing relay cropping in order for us to consider a written agreement for you. And then just a few reminders, it's the same thing. If you've had one of these previously, your deadline has passed. If you have not, you can request it until July 15th. And then we've got lots of information about it for you. But our specialists in the office that handle these wanted to give me a few reminders. And it's really particular for those of you who are planting cover crops. If a first crop was reported to FSA as a cover crop, and you request a written agreement for a double crop, please make sure that you've properly certified your acreage at FSA is essentially what I'm telling you here. If it's a cover crop, certify it as a cover crop. if you're gonna take that cover crop for grain, please don't certify it as a cover crop. Certify it as grain. On the flip side, if you go in and you're planting a cover crop and it gets certified as grain, that could affect insurability at crop insurance, and we might have to ask you to go back and certify it at FSA as a cover crop instead. Does that make sense, or was that confusing? You're probably thinking, maybe that shouldn't matter, but I think you're all intelligent enough to know that our records are talking a little bit more than they were, and it's important. So as you're certifying your cover crops, regardless of if you're gonna have double cropping or anything else, my takeaway to you is, and we haven't talked about it because we're not offering it this year, some of you maybe got the pandemic cover crop $5 on your crop insurance policy last year, at least I hope some of you did. If you don't certify it correctly, we have been making a lot of revisions, but we are hoping that that policy might come back in the future. No guarantees, but you need to certify it properly at FSA.
I got kind of twisted on that last year.
Yeah.
It came really late. Jason maybe can explain what happened, but it was, we were supposed to get this $5, you know, we hear it on the radio and everything, and no, didn't get it.
We had a lot of one-off, I'll tell you this, I know I'm not supposed to take questions right now, but we had a lot of one-off situations like that. And this is the process. If you didn't get it and you thought that you should have, start with your agent. Have your agent talk to their company, and their company will come to us. And we have a way that we can look at your records with FSA, and a lot of it tracks back to what we just talked about. Something was either not certified correctly, or unfortunately, you know, data is perfectly imperfect, right? Sometimes the records didn't come over the way that they should have. But don't take the first no, is what I'll tell you, because we're happy to dig into these, and we've looked at a lot of these on a case-by-case basis. And we're happy to do so. Feel free to come up and get my information. I'm wrapping up here. I'm probably over time. This is just a lot of resources. Again, go check out our website. And the last thing I want to end with is a little plug of how you can be involved in your crop insurance. Every year we do a program performance assessment, and essentially we're reviewing every crop every 3 to 5 years. When we do these, we're out talking to all of you. We want to know how your policy is working for you. So this is what we're reviewing this year. We're reviewing all the livestock policies. So if you're a livestock grower, we'd love to hear from you. We're also looking at Climate Smart, and this is why we'd love to hear from all of you. We understand that some of the rules, some of the policies, some of the procedures that we have at crop insurance are impeding what you're doing that are climate smart practices. So some of the things you're doing, you're like, well, that's nice, but because I'm growing this way or because I'm doing this skip row or wide row, it's not insurable. We'd like to hear about that, and we'd like to know if there's some changes we can make to incorporate that into crop insurance. And then the last things, these are just, we're also doing crop by crop review, and so the fun ones that you're probably super interested in, we're done the last 2 years, we did corn and soybeans. And this year we're doing these crops: grass seed, flax, dry beans, oats, triticale, and I know you don't have cherries and cranberries here. That's all. So please check out our website, a lot of good info there, and Chandra and I are available for any questions afterwards.